In this example, I'm going to show you how to calculate the depreciation expense via the double declining balance method. This example is going to follow the same data that we used before when we are calculating the straight line method. In this example, we have the Agape company purchase equipment at $84,000. To calculate the depreciation expense using the double declining balance, we do not take into consideration the residual value of $10,000. That is completely ignored. So we start out with $84,000 as the cost. As the depreciable cost will be $84,000. But before we start, we have to calculate the double declining balance, the double declining rate. And to do that, we start with the number of years that the company estimates this asset is going to live. So we divide 100% to 5, which gives us 20%. Then multiply that rate by 2. That's why it's called double declining. So it's double. You double the rate. This is the rate that we used during the calculation of the straight line depreciation expense. Now we double it and we get the double declining rate. So take the cost for the first year. We're going to do this for 5 years, which is the estimated useful life. Multiply by 40%. The depreciation expense for the first year is $33,600, which is the same as the accumulated depreciation because of the first year. The first year, the accumulated depreciation will be the same as the depreciation expense. Then the book value is always the same, the cost minus the accumulated depreciation. That doesn't change regardless of the method you use. All right. For the second year, we don't continue with the cost of the asset. Now we have to take the ending book value of the first year, because this will become the beginning book value of the second year. So $50,400 will be our new depreciable cost to calculate the second year depreciation. And we get $20,160 as the depreciation expense for the second year. And the accumulated depreciation is the accumulated depreciation for the first year plus the depreciation expense for the second year, $53,760. The book value for the second year is, again, the cost, original cost, $84,000, minus the accumulated depreciation so far. Now, for the third year, we continue with the book value of the ending of the second year, which is $30,240. Depreciation calculated by the rate, double declining rate, and then we get a depreciation expense of $12,096, which gives us an accumulated depreciation of $65,856, which is the sum of the accumulated depreciation for the second year plus the depreciation expense of the third year, right? So that gives us a book value of $18,144, which is $84,000 again, the cost minus accumulated depreciation so far. Now we have calculated so far $18,144. This $18,144 becomes the book value, the depreciable cost for the fourth year, multiplied by 40%. Then we get $7,257 and 60, which is $18,144 multiplied by 40%. That is the depreciation expense for the fourth year. Accumulated depreciation is the accumulated depreciation for the third year plus the depreciation expense for the fourth year. And that brings us to a book value of 10,886 and 40. Continue with the fifth year, 10,086 and 40 cents. For the last year, we do not calculate the depreciation. Let's just grade this out. No calculation based on the percentage. The last year's depreciation, or the final year depreciation expense, is equal to the book value at the beginning of the final year, which is this one. That's the book value at the beginning of the final year, minus the residual value. So 10,886 and 40 minus the residual value. And let's do the actual calculation here. I left that there so you can see it, minus 10,000. So the last year's depreciation expense is $886.40. And that brings us to the total accumulated depreciation. As you can see, this item has been completely depreciated, but the accumulated depreciation is equal to the depreciable cost. And the book value, like I said before, never goes below the residual value. The book value at the end of the last year is the same as the residual value. It never goes below that. Now, if we want to calculate partial depreciation under this method, very easy to do. We take the double declining balance. First of all, we have to determine, we get the cost. Let's say we have to calculate partial depreciation for, let's say 3 months. 3 months. So we start out with 84,000 by 40%. We know already that 84,000 by 40% here is 33,600. That gives us the depreciation expense for 1 year, 1 full year. If I want to find out how much is this depreciation for 3 months of the year, I have to break it down into months. I do that by dividing 33,600 into 12, right? Which is, this gives me the monthly depreciation expense. Now I can multiply this amount by 3 months. And this gives me the depreciation expense for 3 months of the year, right? So this was my demonstration how to calculate the depreciation under the double declining balance. I hope you enjoy this, and thank you for watching.